Among the countries holding Bitcoin, the US government ranks first with approximately 207,000 Bitcoins, followed by the Chinese government with 190,000, and the UK government with 60,000. Although smaller nations hold fewer Bitcoins, Ukraine ranks fourth with over 40,000. According to the data, although the market share of Bitcoin held by various countries is only 2.45%, if the former US President announces at the Nashville Cryptocurrency Conference that Bitcoin will be designated as a strategic reserve asset, this percentage could increase. If this policy is adopted by the US Treasury, it could change the global landscape, making other countries realize the necessity of holding Bitcoin. Nations might follow the US's lead and list Bitcoin as a strategic reserve. When that happens, Bitcoin's value will continue to rise, and countries will race to accumulate Bitcoin, much like the competition for gold, silver, platinum, and oil. The first positive news is the Trump effect. First, since Trump was attacked at a Pennsylvania presidential election rally, his chances of winning the 2024 presidential election increased from 60% to 70%, with support from billionaire entrepreneurs like Elon Musk. They recently held talks that positively impacted the cryptocurrency market. Trump also proclaimed himself the first American president in cryptocurrency history. Additionally, he announced J.D. Vance as his vice presidential running mate. Vance, a venture capitalist and crypto supporter, has repeatedly voiced support for cryptocurrencies and pushed for favorable legislation. Finally, Trump plans to appoint Jamie Dimon, CEO of one of the world's largest banks, JP Chase, as Treasury Secretary. Dimon has reversed his stance to support cryptocurrency and is keen on blockchain technology. In his 2022 letter to JP Chase shareholders, he expressed support for DeFi and blockchain, calling them groundbreaking new technologies. JP Chase has been leading the exploration of distributed ledger technology, developing several blockchain-based products, including its Link network and JPM coin, while Onyx is a blockchain project developed by JP Morgan. The second positive news is that the Federal Reserve is expected to cut interest rates around September 18th. The Fed's rate cuts often impact cryptocurrencies. Historically, before the Fed stopped cutting rates in July 2019, Bitcoin experienced explosive growth. Although the impact of the Bitcoin spot ETF is more significant now, the Fed's rate cut expectations should not be overlooked. Bitcoin rose from a low of $15,000 to $70,000, similar to the growth seen before the last Fed cycle in July 2019, when Bitcoin rose about 19% within 2 weeks after the rate cut. Afterward, the market reaction calmed down, a situation known as buy the rumor, sell the news. Historical data shows that Bitcoin usually rises before a rate cut, with a significant increase within 1 to 2 weeks after, and then the positive effect gradually fades after the rate cuts end. It's expected that the September rate cut will be favorable for Bitcoin, with positive effects within 1 to 2 weeks after the cut. The period from now until mid-September to October is expected to be favorable for Bitcoin. Our FSP is scheduled to go live on September 30th, making this an ideal time. The third positive news is that the Ethereum spot ETF will start trading on Tuesday, July 23rd, US time. The approval of the Ethereum spot ETF marks the beginning of cryptocurrency legalization. Historically, altcoins have been influenced by Bitcoin price movements. When Bitcoin corrects from a high point, like $70,000 by 23%, altcoins generally correct by 30 to 50%, or even more. However, Solana has defied Bitcoin's price fluctuations, instead rising against the trend within 4 months. Other coins like Toncoin and the SUI public chain have also shown strong rebounds during the August Black Swan event. The fourth positive news is that multiple U.S. states are exploring the possibility of investing a portion of their retirement funds into Bitcoin and other cryptocurrency assets. Michigan has already invested in Bitcoin ETFs through its retirement fund. The Arizona Senate passed a resolution encouraging state pension fund managers to consider investing in Bitcoin ETFs. Meanwhile, Jersey City announced plans to invest 1% of its pension fund in Bitcoin ETFs. Other states, such as Texas and Virginia, have also made investments in the cryptocurrency space. Despite this, the U.S. Department of Labor has cautioned to proceed with caution. On the regulatory front, the CFTC is developing a digital asset classification framework to facilitate future legislation. The most important news is the official start of trading for the Ethereum Spot ETF, which will allow altcoins to operate independently, potentially leading to sustained price surges, a decline in Bitcoin's market dominance, and an increase in altcoin dominance, which will positively impact SCF and FSP.